Hi, this is John Lien from TaxSaleList.com again. We're going to go over briefly the due diligence process. This is probably the most important aspect of tax sales, and it is a subject we spend almost 3.5 hours on in our 15-hour workshop, so I obviously can't go over it in the same detail in a 8 or 10 minute video. But this process of due diligence is extremely important, and it's the heart of making profits from tax sales. Really, the two pictures tell it all. Do you want to buy the property on the left, or do you want to buy the property on the right? These two properties were on the same tax lien sale, and the difference in price between the two was $38. So obviously, if you looked at both properties, it'd be pretty easy to make that decision. But the problem is, a lot of people have been told by the gurus that you don't need to look at anything. I look at some of the videos on YouTube, and that's exactly what they're telling you. Now, this property on the left has the critical things you need for a successful tax lien investment. People can live in the house. The structure has value. That's really what we're talking about. Can you buy a lien on a property that has value, that provides a living space for someone, and where the lien amount doesn't exceed the value of the property? The lien amount on this house was $37.96 less than the other property we showed you. The one thing you have to understand about tax sales is that if you end up with a property, your acquisition cost on that property is going to be so low, generally less than 15% of market value, that it will allow you, number one, to sell the property quickly, but more importantly, if it has value as a living structure, then it's got value and something you can make money from. Now, this other property, obviously, nobody can live in it. It has little, if any, value as shelter as an investment. The only hope here would be if the land value was 8 or 10 or 12 times what you would pay for the lien. And it's highly unlikely that you're going to find a property like this in a situation where the land values are high enough to bail you out, especially if it's one of those jurisdictions where they come in and put a demo lien on the property, they demolish it, they charge you $8,000 or $10,000, and a lot of times those demo liens are not relieved by the tax lien sale. So you've got to figure out, how do you determine which property you want to purchase a lien on? Now, this process of making that determination is called due diligence, and it covers 3 main steps. First of all, you have to get the list of the properties, and there are any number of ways you can get the list of the properties, and we'll go over them. You then eliminate the properties you're not interested in. You don't want to spend any time on anything that you have no interest in. It's a waste of your time, and it makes the job impossible if it's a large list. Where I live in Colorado, Denver, Colorado, can have a 5,000 property list. There's no human being on the face of the earth that by themselves can go look at 5,000 properties in the time between the time the list is published and the sale. So you want to eliminate properties you're not interested in. You want to get the information you need on the properties you are interested in. To get the list of properties, you have several different sources. You can call the taxing jurisdiction. Sometimes they will have a list that they can send you. Quite often they won't do this, but every now and then they do, and sometimes they post it on their website. And if you can get the list this way, it's obviously the cheapest way to do it. And if it's in some sort of machine-readable format, you can probably convert it into something that is useful. The next source is the newspaper. Every single tax sale the list is published in a newspaper somewhere in the country. It's got to be. It's required by law. It's normally a small legal newspaper in that jurisdiction. but you can get it in newsprint. The problem with newsprint is you can't do much with it. Now, obviously, I'll give you a commercial for us. TaxSaleList.com publishes 10,000 lists on our website, and we put them all on Excel. There are a couple other list sources out there that are commercial that cover a state or maybe 2 states. We cover the whole country, and they will provide a list in Excel. Now, how do you eliminate the properties you're not interested in? You look at property type. If you're only interested in single-family residential, don't look at anything else. Eliminate everything else. If you're looking at a particular dollar range on liens, you're only looking at liens between $700 and $1,500. Eliminate everything else. You can do a lien to value ratio, especially if they give you on the list the total assessed value, and determine what the percentage of cost the lien is to the total value of the property. You can look at the improved value to the total value. You can have your own criteria on how you eliminate properties. It could be zip code, it could be a particular area of town, it could be any of a number of things, but you want to go through this list and cut it down very quickly so you aren't spending a lot of time on properties you don't care about. How do you get the information on those you are interested in? Well, first and foremost, the assessor's office will have information on the properties. That's the one good source of information on all properties in that jurisdiction. And quite often they have a website. In fact, I'd say the majority of them now have websites, so you can do it online from home. You can go out to one of the commercial programs, First American Real Estate Services, DataQuick, LexisNexis. They're expensive, but they have good information. You can eyeball, you do want to eyeball the property, not necessarily in person. You can do it online or through a third party if it's not local. You don't want to fly 2,000 miles to go look at 100 properties. It isn't economical. But there are a number of tools that allow you to get good photos of not only the property, but of the neighborhood, which is every bit as important as the property itself. And then finally, once you've gotten this information, you want to rate the properties. We cover a rating schedule in our workshop. It can be any kind of a schedule that you set up yourself. If you'd like to learn more about this, go to www.taxsalelist.com and register for our free workshop, An Introduction to Tax Sales. This is an informative, no hype, 1-hour workshop that talks about tax sales and how you can profit from them. It's based on a lot of experience on both my part and the rest of my team's part. My daughter Lindsay has been in the business 17 years. So come to our workshop. We'll teach you more about how this works. It is a fascinating business, and it's a business you can make a lot of money at if you do your due diligence the right way.